maximizing gains with low-risk crypto. If you like my content, please subscribe to my channel. Welcome to our comprehensive guide on crypto trading. As the world of cryptocurrency continues to expand, understanding how to navigate this digital frontier has never been more crucial. In this video, we will explore maximizing gains through low-risk investments and effective risk management strategies. Whether you are a beginner eager to enter the crypto world or an intermediate trader seeking to refine your approach, this guide is tailored for you. Cryptocurrency trading offers a unique blend of opportunity and challenge. Known for its volatility, this market holds the potential for substantial financial rewards. The key to unlocking these rewards lies in strategic, low-risk investments. By focusing on minimizing risks, you can protect your capital while positioning yourself for growth. Throughout this video, we will cover essential topics for success in crypto trading. We will start with an overview of the cryptocurrency landscape, emphasizing the importance of low-risk strategies. These strategies are not just about reducing potential losses, they are about creating a sustainable path to profitability. We will introduce core themes, including effective investment strategies, the critical role of risk management, and identifying low-risk opportunities in the crypto market. Our goal is to equip you with the knowledge and tools needed to make informed decisions and thrive in this dynamic environment. So, if you are ready to embark on this journey, stay tuned as we unravel the intricacies of crypto trading. By the end of this video, you will have a clearer understanding of how to approach the market with confidence and caution, ensuring your crypto trading experience is both rewarding and secure. Let us get started. Now that we have set the stage, let us dive into investment strategies that focus on minimizing risk while maximizing returns. In the dynamic world of cryptocurrency, navigating opportunities requires a keen understanding of various strategies that safeguard investment while ensuring steady growth. First, consider the importance of diversification. Just as you would not put all your eggs in one basket, the same principle applies to your crypto portfolio. Diversifying your investments across different cryptocurrencies can significantly reduce risk. This approach not only spreads potential risk but also increases the likelihood of capturing gains from various market movement. Next, consider dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the cryptocurrency's price. Over time, this method can help mitigate the impact of market volatility. By purchasing more units when prices are low and fewer when prices are high, you average out the cost of your investments. Balance between long-term and short-term investments is also crucial. Long-term investments in cryptocurrencies with consistent growth and stability CA foundation for your portfolio. These are typically well-established coins with a strong market presence. Conversely, short-term investments can be made in trending coins that may offer quick returns. However, approach these with caution, as they often come with higher risks. By combining both long-term and short-term strategies, you can create a dynamic portfolio that adapts to market changes. Staying informed about market trends and news is another vital strategy. The cryptocurrency market is highly influenced by external factors such as regulatory news, technological advancements, and market sentiment. Keeping abreast of these developments can provide valuable insights into potential investment opportunities and risks. Resources like crypto news websites, forums, and Social media channels can be excellent sources of information. Furthermore, having a clear exit strategy is essential. Knowing when to sell is as important as knowing when to buy. Setting predetermined goals for your investments can help you make informed decisions and avoid emotional trading. By exploring these strategies, you can approach cryptocurrency investments with a mindset that prioritizes safety and growth. Remember, the key to successful crypto trading lies in understanding market dynamics and making informed decisions that align with your financial goals. As we continue our journey, we'll delve into the critical aspect of risk management, exploring techniques to protect your investments and navigate the crypto market with confidence. Stay tuned as we uncover more insights to empower your trading experience. Welcome back to our comprehensive guide on crypto. In this segment, we're going to delve into one of the most critical aspects of successful trading: risk management. Whether you're a beginner or have some experience under your belt, understanding how to effectively manage risk can be the difference between a thriving portfolio and significant losses. Risk management isn't just a strategy, it's a fundamental principle in cryptocurrency trading. The volatile nature of the crypto market means that prices can fluctuate dramatically in a short period. First, let's discuss the importance of setting clear risk parameters. Before making a trade, determine how much of your portfolio you're willing to risk. Next, explore the use of stop-loss orders. A stop-loss order is a tool that automatically sells your cryptocurrency if it drops to a certain price. This can help limit your losses and protect your capital from significant downturns. By setting a stop-loss, you remove the emotional aspect of trading. Diversification is another key technique in managing risk. By spreading your investments across different cryptocurrencies, you reduce the impact. Consider allocating your investments across various sectors within the crypto market, such as DeFi, stablecoins, and emerging projects. This approach not only helps mitigate risk, but
also opens up opportunities for gains in different areas. Now, let us talk about some tools and resources that can assist you in managing risks effectively. Many trading platforms offer advanced analytics and charting tools that provide insights into market trends and asset performance. Additionally, staying informed through reputable crypto news sources and community forums can give you a broader perspective. Finally, it is vital to continuously review and adjust your risk management strategies. The crypto market is ever evolving. In summary, effective risk management is not just about protecting your investments, it is about empowering you to trade with confidence. Stay tuned for our next segment, where we will explore how to identify low-risk opportunities in the crypto market. Welcome back to our comprehensive guide on crypto trading. By now, you should have a solid understanding of the importance of investment strategies and risk management in this volatile market. Now, let us delve into identifying low-risk opportunities in the cryptocurrency market. In the ever-evolving landscape of cryptocurrencies, spotting low-risk opportunities can be your gateway to maximizing gains while keeping potential losses at bay. But how exactly do you identify these golden opportunities? It all starts with understanding market trends. Market trends in the crypto world are like ocean tides, they ebb and flow, presenting opportunities for those who can read them accurately. Begin by keeping a close eye on market indicators. These tools and signals help you understand the current market sentiment. Are investors feeling bullish, or is there a bearish outlook? Knowing the general mood can guide your investment decisions. Another crucial aspect is understanding the historical performance of cryptocurrencies. Look for patterns in price movements and trading volumes over different periods. This historical data can provide insights into how certain cryptocurrencies behave under specific market conditions, helping you make more informed decisions. Next, evaluate the fundamentals of the cryptocurrency you're considering. This means looking into the technology behind the coin, the team developing it, and the real-world problems it aims to solve. Additionally, pay attention to regulatory news and developments. The regulatory landscape can significantly impact cryptocurrency prices. Positive regulatory news can boost confidence and prices, while negative news can lead to downturns. Now, let us talk about the tools available to assist you in analyzing potential investments. Numerous platforms and software offer in-depth analysis of market trends, historical data, and even predictive analytics. For beginners and intermediate traders, leveraging these tools can be invaluable. They provide detailed insights and analytics that can guide you in identifying promising low-risk opportunities in the vast sea of cryptocurrencies. As you become more adept at identifying these opportunities, your confidence will grow. This confidence is crucial in making swift decisions, as the crypto market can change in the blink of an eye. In conclusion, identifying low-risk opportunities in the crypto market requires a blend of market knowledge, analytical tools, and keen observation. With these insights in mind, you're now better. Welcome to our comprehensive guide on crypto trading.